Good afternoon, welcome to GrainTV. It's December 10th, 2013. I'm Logan Burgess. To my right here is Brock Shimano to help break down the action on the December WASDE report day. Jumping into the quotes here, we see corn down 2 cents, soybeans off 5.5 cents for the January contract. Chicago wheat led to the downside, down 11 3/4. Brock, at first take, when we looked at these numbers today, certainly looked like some numbers from the USDA that should support the trade. We didn't see that here into the close. What's your take on that?
You know, I think this is kind of a situation where people were buying the rumor and they're going to sell the fact. What we got today was the fact that we do have lower ending stocks than what was originally anticipated. But leading into this report, we saw a couple of days of buying, especially in the soybean market. We saw a couple strong up days. We hit new highs for the move around 13.53 1/4 early in the session. Once we got the report out, though, we did sell off, and I think a lot of what was leading us to the downside was going on in the wheat market. We saw some pretty overly bearish numbers for the wheat market today.
Yeah, certainly. Let's jump into those numbers reported by the USDA this morning. As you can see here, the first column shows what the USDA reported in November. The middle column is what was expected from today's report, and the last column here, December reported, is what the USDA actually projected 2013-14 ending stocks at. You can see here for corn, quite a bit lower than what the trade was expecting, coming in at 1.792 billion bushels. Brock, quite a bit lower, as I said. Where were some of the surprises? What are some things that traders were really looking at there?
You know, we were looking at some of the demand side revisions. I think one of the surprises for the market was the ethanol revision higher for the use of corn. We saw that move higher by about 50 million bushels. We saw export sales move higher by 50 million bushels. That export sale number was expected, a little bit of a revision higher. I think 50 million bushels kind of caught some people by surprise. Yep. So in total, we saw demand raised by 100 million bushels. On net, we saw ending stocks lowered by 95 million bushels. So that really kind of caught this corn market by surprise. What should have been supportive, we ultimately ended up negative. You know, soybeans, kind of a similar story. We came in pretty close to what the analysts were expecting, right around that 150 million bushel mark. And we definitely saw some demand side revisions for soybeans as well.
Yeah, we did, Brock. You know, if we look at the soybean balance sheet from today, we saw imports were raised by 10 million bushels, crushings were up 5 million bushels, and exports up 25 million bushels. I think that export number is one area that people are going to look at to possibly be revised here moving forward. I know, looking at our models right now, soybeans are well ahead of the pace needed to meet the current USDA expectations. We're going to have to kind of rework those models and see how today's number plays into that. But certainly 25 million bushels on soybean exports, I think, is a little bit light in some traders' minds. Keep in mind right now on soybeans, with 150 million bushels projected in ending stocks, that leaves stocks to use at just 4.5%. So that's very tight, and if you look here at the expectations, a little bit below what the trader's expecting. I think looking at today's number and seeing how the trade reacted for soybeans makes me a little bit nervous. It kind of has the feel right now of a market that may be losing a little bit of steam. Just this afternoon, we're seeing spot soybean basis back off in the Western Corn Belt at a couple key facilities. So with that said, I'm a little bit nervous about the reaction to this report that the bean market showed.
You know, I think it was a matter that we were buying the rumor, selling the fact coming in this report. You know, the big thing about soybeans and the export sales figures that did get revised higher, we typically see our export sales front-loaded towards the beginning of the marketing year. So we should taper off towards the end of the marketing year. So I don't know if a revision will be coming down the pipeline, although we are, or before this report, we were running about 300 million bushels ahead, so we could see another revision further out in time. You know, let's not forget about wheat here, though. Wheat was expecting a pretty large revision to the downside by 18 million bushels was what was expected. We saw a revision actually higher by 10 million bushels, and all that was coming from increased anticipated imports. So we didn't see any demand side revisions for wheat, but we did see those imports increase by about 10 million bushels.
Yeah, you know, one thing that was important in today's report, Brock, was the world ending stock number. I know, you know, over the last several months, a lot of the focus has just been on the U.S. stocks, but as we move into the winter here in more of an export-focused market, those world ending stocks are going to become more and more important. Take a look here at this table. You can see that for corn ending stocks, those came in a little bit lower than what the trader was expecting. That could be something that's going to support the corn market here moving forward. I think, though, the big focus in today's report was world soybean ending stocks. Take a look here. Came in well below what the trade was expecting. The USDA didn't make a lot of changes from what they projected in November. A big result of that was that a lot of traders were looking for the soybeans production figure out of Brazil to be raised. We saw the USDA leave that unchanged. And coming as another surprise, we saw Argentinian production raised by 1 million tons. So I think that's two things that caught some traders by surprise today. And that's another factor that really should be supporting the soybean market. And I think that adds to the notion that it was buy the rumor, sell the fact. We got smaller than expected ending stocks on the world front for soybeans, and it did very little to support the bean market here in today's action.
You know, I think a real driver, especially in that wheat market, was these world-ending stock figures.
Yep.
If you take a look at these numbers here for wheat, you can see that we came in about 4.3 million metric tons ahead of where we were in the November report, and we were about 3.5 million metric tons above what was expected in the December report. So I think that was the real driver for the wheat market. You know, that let us lower by about 11 and 3/4 here domestically. You know, I think corn and soybeans ultimately ended up following them on what was slightly supportive for both corn and soybeans this report. We saw an overly bearish report for wheat, and I think that really pulled the market down here today.
Yeah, certainly. Well, at the close today, a lot of red on the board. It's going to be good to see how this grain market reacts in tomorrow's trade. Are we going to see a follow-through on today's weakness, or are traders going to sleep over these numbers a little bit and may come back in and find some buying interest in tomorrow's trade? As I said, it's going to be important to watch that. Fundamental news coming out this week for the grain market. We're going to be getting EIA ethanol numbers out tomorrow. Expect a very strong number there once again. The ethanol crush margin remains near $4 a bushel, so that's really giving it a lot of an incentive to produce ethanol here at the moment. Thursday, we'll be getting export sales, and that's going to be watched very closely. That was a highlight of today's report for a lot of traders. We'll keep you posted on both of those reports as they come out this week. In general, though, that wraps up what we saw here on a Tuesday for a WASDE report day on GrainTV. General weakness across the grains. We'll have to see how they respond tomorrow. Thanks for joining us. We'll see you then.